Okay, on the back of its strong Q2 earnings, ET now has proposed Deepak Nitrite as its earnings Dhamaka candidate for today. Let's take a look at why that's happened, what the performance has been YoY and QoQ, and why there is a case of re-rating for this stock among many brokers. Now, firstly, it was a very robust performance. Sales were 987 crore versus last year's 1003 crore. EBITDA was 276 versus 250 YoY. So what did you notice? You noticed that the sales slightly tapered off, barely, but EBITDA went up by 10%. So that means that profitability has really increased, and that's reflecting in your margins. Your EBITDA margin has gone up to 28% versus 25%. So we're seeing a 300 bips improvement on the EBITDA margin. As a result of this, profitability has also come in at 170 crore versus 150 crore YoY. So that basically means that despite an environment where your sales were under pressure, the profitability has not suffered at all, right? So Deepak Nitrite is now doing close to a 4,000 crore revenue and close to around 1,000 crores of EBITDA at a 25% TTM margin. That's over the last 12 months. So that's, if you want the exact figure, that's 978 crores of EBITDA on a turnover in the last 12 months of 3,837. Now, what's particularly interesting is that the performance has been robust for a while and trending upwards, right? So if you look at other chemical companies like AARTI, for example, they have a very similar top line. They in fact have lower EBITDA margins, right? So let's just do a comparison between Deepak Nitrite and AARTI. And the reason we're flagging this off is because they both seem to be a similar size revenue. They both seem to have similar profitability. In fact, Deepak Nitrite has higher profitability, but the multiple that Deepak Nitrite trades at is significantly lower than that of an AARTI Industries, right? So like for like comparison, ROCE at Deepak Nitrite is 37% versus just 16 for AARTI. ROEs for Deepak Nitrite are 46 versus 19 for AARTI. TTM margins, that's EBITDA, are 25% for Deepak, and that's a TTM margin. This quarter's margin was 28%. 25, let's take TTM versus AARTI's TTM of 21%. So 400 bips higher margin, higher ROCE. So why should the TTM PE of Deepak Nitrite be 17 and of AARTI be 36? It's nearly twice the multiple. So that's what brokerages are flagging off. Guys like IIFL put out a note this morning. They're waiting for the Deepak call, which will happen this week. And then post that call, you might see a big upgrade coming in for Deepak Nitrite from IIFL. Other brokerages may follow as well. Also, you're seeing a lot of buying action in Deepak Nitrite. Institutional interest has really picked up. Also, FII interest has picked up. So those are the reasons why it's our earnings Dhamaka candidate. And if this kind of performance continues and it is the same revenue and same profitability as some of the other chemical companies which are trading at a much higher multiple, you might see Deepak Nitrite play catch up on that.